I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by IMI Global, third-party verification and added services you can trust. Third-party verification programs are an important part of your risk management toolkit. You're doing everything you can to select the best genetics, feeds, and health programs, so why not maximize those efforts by opening the door to expanded market opportunities? Visit imiglobal.com today to get started. The United States continues to grow beef production in 2017. Year-to-date, beef production is up 689 million pounds, or a 4.5% increase over 2016. The U.S. is currently on pace to produce more than 26 billion pounds of beef annually for the first time since 2011. Not only is production ramping up, but the U.S. is producing higher quality beef at a larger volume. Of the 689 million pound production increase, over 633 million pounds of that product has graded choice. Year-to-date, choice grading percentage is 2.16% higher than 2016, with 72.22% of beef production grading choice. Last week, U.S. beef production ratios showed 4.38 pounds of choice product being supplied for every pound of select beef. At its peak, on the week of February 12th, that ratio was as high as 4.72 pounds of choice to pounds of select. Non-coincidentally, in the following week, the choice select spread was at a low of $1.10 per hundredweight. As the choice to select production ratio fell, the choice select spread reached an all-time weekly high of $32.38 per hundredweight in June, but now 10 weeks later the spread is close to retesting those February lows. The beef composite cutout has trended steeply lower, just as the choice select spread has. From a weekly average high of $245.19 per hundredweight on June 16th, the cutout has given up nearly $50 in 10 weeks, with an average at $193.26 last week. The cutout often finds a seasonal bounce over the past 2 weeks, but it did not have one this year. Beef packers have been working fed cattle prices lower, so they've been buying cattle cheaper, week in, week out. Instead of trying to firm up beef prices today, the packer has been much more focused on their bottom line and packing profitability, and the strategy is working. Packer profits have averaged over $100 per head through 2017, but over $180 per head through the past 6 weeks. Although beef prices continued to trend lower, buying cattle at a cheaper price protected the margin, so the packer has not felt the need to adjust asking prices higher just yet. The beef composite cutout is expected to find support between $180 and $190 per hundredweight as it moves into a seasonal low this fall. Be advised, however, the packer might not be fully incentivized to increase beef prices until the fed cattle market has discovered its own fall low. Thanks for watching. Remember to visit CattleFax.com to become a member and see the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.